Okay, thank you, everyone. Thank you. Hello, Reloaders. I am Tanya Economou. I'm a board member of Reload Greece and volunteer since its inception. And coming from the financial world, I can't help but introduce a very practical matter, but an essential piece of the puzzle, which is that of financing and access to financing. The next discussion will focus on a specific funding opportunity in Greece, and I'll pass it on to Yannis Palaiologos, journalist of Kathimerini, who will moderate this discussion. Thank you.
Thank you very much. Okay. I need to press something. Hello? Yes, okay. Great to be here again, and I was really interested in the discussion of Estonia earlier. As some of you will know, Greece has chosen to learn a lot from Estonia's experiences by attacking the country as Nazi apologists in the last couple of months over a conference that Estonia was going to hold about the legacy of communist regimes in post-war Europe. So we're not really doing our best to learn from them yet. Our session today is going to be about the ability of Greece to develop its digital economy. There's been a first wave of startup growth in the very difficult years of the crisis, and there have been some notable success stories, companies that have gotten really big funding rounds like Workable, like Versado, some important exits like Beat, and of course Ethics, whose founder will be here later to speak to us. But of course, I think we're quite far yet from reaching critical mass. There was a recent survey done by the Fletcher School called Digital Planet, and in that survey, I believe Greece was second to last out of 60 countries in terms of its digital evolution, both in terms of economy and e-government. So we have a ways to go, and we have the new funding instrument that is coming into play called Equifund, funded both by national and European money. And we have here two experts on this issue who will talk to us about this. Mr. Nicholas Jennett, who is the Deputy Director General and head of the Greece investment team at the European Investment Bank, and Mr. Yannis Tsakiris, who is head of division at the Department of Mandate Management at the European Investment Fund, which is was centrally involved in the first round of startup investment in Greece, and will have a central role also in the second wave. So I'll begin with Nicholas, who will talk to us briefly about the EIB's role in fostering growth and where Equifund fits into all that.
Okay. I think I'm on. Okay, well, thank you very much. Yeah, Kalimera, I'm the first person that's actually said that. But I mean, a bit unusually, I feel, Yanni, I feel a bit intimidated, actually, because we've had fantastic presentations today from people who are really at the cutting edge of entrepreneurship, and we're just bankers, actually. And bankers, for lots of reasons, need to be pretty modest these days. I mean, that said, modest because all we can do is finance the ideas. The ideas always need to come from entrepreneurs. And I was particularly pleased to hear today that a number of speakers have already recognized that, yes, of course, entrepreneurs in the private sector, but we also need entrepreneurship in the public sector as well. Now, that said, of course, if we don't do our job, we can certainly stop things happening. But so it's important that we're indeed facilitators. And in the European Investment Bank group, we're making a big effort to facilitate and change the way in which we facilitate in Greece. For those of you that don't know much about the EIB, you probably actually know a little bit more about it because of the discussions around how EIB, the role of EIB, its relevance in respect of Brexit, but let's put that on one side. We actually have a very simple business model. We are the bank of the 28. The European member states are our shareholders. We have an extremely simple business model. We issue bonds on world capital markets. They're AAA rated bonds, and we on-lend the proceeds of those bond issues on a not-for-profit basis to eligible projects across Europe. And we do that, and indeed worldwide, but principally Europe. And we do that really on a huge scale. I think this year we'll lend, we will issue, we will borrow and lend something like 70 billion euros, which is a significant sum of money in European context. It's macro significant. And we do so actually on a very large scale in Greece as well. This year we're hoping that we will sign finance contracts with Greek entities, public and private sector, to the value of around 2 billion euros. And overall our exposure to Greece at the moment, bankers always talk about exposure, our exposure to Greece is 16 to 17 billion euros. It's around 10% of Greek GDP. That's mixing a stock and a flow, but nevertheless it gives you an idea of significance. Now, we're best known in Greece for our financing of infrastructure projects. It was great to hear some of the infrastructure projects that we financed, like the road network, the metro, and others. Athens Metro mentioned in the previous presentations. But we're trying to change that a little bit, and in particular, we're trying to change it to reorient our lending towards private sector lending and private sector investment. We're doing that with the support of a really quite important European initiative called the Investment Plan for Europe, the so-called Juncker Plan, which is not very well known actually in the UK, although is extremely well known in other countries. And those of you that are living in Greece will know that it's very well known in Greece as well. And we've been pretty successful there, and by we I mean both the EIB and our colleagues, our subsidiary, the EIF. We've already actually committed something like 1.5 billion euros of finance under the Juncker Plan to Greece. And there are only 6 countries in Europe that have achieved that level of Juncker Plan investment. And those 6 countries, you won't be surprised to hear, are France, the UK, Germany, Italy, Spain, and Poland. So Greece is up there with some big economies. And if you adjust what we've done under the Juncker Plan for Greece's GDP, Greece is right up there in podium position. Now, in terms of financing entrepreneurship, we're delighted that we've already got a small but growing portfolio of very innovative companies already in Greece, and this will grow over the years to come. On the public sector side, we were really proud last year to partner with the government to finance the new Hellenic Institute for Research and Innovation, which is a new initiative which EIB is providing 180 million euros to finance PhD students in Greece and postdoc scholarships and fellowships in Greece, with the idea of retaining scientific talent or attracting it back to Greece. This is really a first. And finally, and at this point, I know questions will come to my colleague Yannis Tsakiris, Equifund, which is, I think, Yanni, it would be fair to say, a game changer for Greece. Potentially, it will take Greece from a position right down at the bottom of the league table in terms of access to equity for startups, for growth, for tech transfer. It'll take it from the bottom to potentially right up to the top, because
260, which we expect, including the private sector participation, to be a bit more than 400 million euros to be invested in the form of equity into Greek companies the next 5 years, and in particular in startup companies, seed financing, in technology transfer investments, accelerators, which is, as Yannis said before, that's the second, let's say, wave of equity financing into technology startup companies in Greece. The first one was some years ago with an initiative of the European Investment Fund called Jeremy. So we managed to finance with 60 million euros 4 funds in Greece. Namely, it was Open Fund 2, it was PJ Catalyst Fund, Odyssey Fund, and First Athens. Those 60 millions of contribution of European structural funds money attracted also another 20 million of private investors. Workable, that you mentioned before, is, for example, is a result of this effort. And now we expect that this new initiative, Equifund, really to boost equity investments into startups and seed financing. Of course, it covers all the stages of financing, from seed up to growth capital. And this is within our policy to, let's say, to strengthen, or I would say to revive, the equity ecosystem in Greece, which theoretically is almost dead. And when I'm talking about equity ecosystem, it's not only the venture capital funds and the startup companies that, or the established companies that are going to be financed, but it's also lawyers, is investment banks, is M&A advisors, is accountants. There's a lot of surrounding, let's say, companies that they're going to be benefit, they're going to be learn more what is equity financing, what is risk capital, and we strongly believe that in a couple of years we'll have the first results, let's say, of this attempt. Just to give you an idea, we are expecting that around 80 million euros is going to be invested in seed and startup financing, particularly in the technology sector, which, just making some calculations, this means that around, I would say, 200 to 300 companies startup companies might benefit from equity financing, which, let's say, given the current situation in Greece, is a bit of an achievement. But allow me very briefly just to go a little bit back, because I didn't introduce EIF, and I will take the opportunity of the previous speaker talking about Skype, that there is it needs sometimes a chain of fortunate events for things to happen. And if EIF was not around, maybe Skype also wouldn't be around, because we, as EIF, we are investors in a fund, Mangrove Capital, a Luxembourgish fund that financed also Skype. So it was us, partially, let's say, that we we share part of this glory, and of course we made also a very good profit on this. Yeah. So
this is when I said bankers needed to be modest. You should hear him when he's in real sales mode.
Absolutely. So we as the EIF, our main target is to invest in private equity and venture capital funds across the European Union, which in turn those venture capital and private equity funds are investing into high growth, innovative companies, which, let's say, with our participation, are expecting to grow more and quicker. And that's also what we are trying to achieve in Greece with Equifund. That's more or less in terms of figures. We as the EIF, we have invested, let's say, so far in, we are currently invested in more than 500 venture capital and private equity funds, which in turn, let's say, they have invested in more than 15,000 companies throughout EU 28.
Let's talk a little bit about the Equifund specifically and how it differs from the previous round. Obviously, it's much bigger. What it learned from the previous round, and also whether you think that, I mean, obviously there have been significant strides that have been made in terms of the growth of the ecosystem since 2012, but Are we confident that the ecosystem is rich enough to absorb this large sum of investment?
We are absolutely confident, and that's a lesson learned from the previous phase, where we saw that demand was by far bigger than the supply of funding that we were given. We are expecting to invest in 10 venture capital and private, up to 10 venture capital and private equity funds in Greece. And from the analysis and due diligence that we have done so far, it looks that not only money will be well absorbed, but would be good if, let's say, a couple of years down the road, we start preparing for the next, for the third round. So that's how we see it.
Yeah. If I could just add one thing to that. I'm absolutely certain that that's right. Equifund is going to be a fantastic success. So the opportunity is there for Greek companies, but I mean specifically if we focus on the growth window. So these are companies which are established, but now need an equity injection to take them to their next level of their next level of performance. It's extremely important that Greek companies understand that there'll be a trade-off sometimes between growth and control.
Exactly.
And you know, we're not going to talk about examples, but I mean, I have seen examples in Greece of companies that actually are prepared to sacrifice growth in order to retain control. And I think this is also, I mean, going back to the a culture of growth and entrepreneurship. This is something that we need to keep on the radar.
It's certainly been an issue also in the effort to restructure companies that are in difficulty.
For example.
Often seen that even though it's rational and it makes economic sense for the original owner to give up control, that hasn't been happening to the extent that it should to help the economy move. Another thing I wanted to ask both of you is, what about the aspect of the commercialization of research that's done? We have a lot of good basic research in Greek universities. Very little of that finds its way into startup companies. Is there something in Equifund that will help in that direction? Either of you?
Yes, of course. The Equifund consists of 3 windows, which is one is the growth window, the early stage window, and the innovation window. Particularly, this innovation window is aiming at seed financing, technology transfer and acceleration, which by definition the majority of the pipeline comes from universities and research institutions. So while EIB has financed the research institute, which is going to provide fundamental research elements into the Greek, let's say, knowledge base. The innovation window of Equifund is going to finance ideas and technologies that, let's say, have very good chances to be commercialized and potentially to be transformed into successful companies. So it's one of the key policies that we have.
Yeah,
Nick?
I mean, we see this very much as part of a coherent continuum that we're trying to finance now from this first time. I mean, we talked a lot about investing in the importance of investing in human capital, but through the 180 million euros that we're making available for the Hellenic Institute, this is nothing other than human capital investment. It's literally financing a number of PhDs and in the next round, postdoc researchers who would otherwise have done their research outside Greece, bringing that back to Greece. So what we're hoping is that we're putting in place a series of instruments that will actually, finance the idea throughout its growth journey, if you like, starting with the fundamental, through the startup, and then ultimately as companies grow in due course. I mean, our ideal is to see some of those companies then graduate into ultimately finding debt financing in their next phase of development, either through the banks that we partner with, or for us, I guess, better still, directly from EIB. So wherever a company is on its growth journey, our vision is to make sure that there's an EIB product delivered directly or through funds or partner banks that can support that company.
Now, what about the eligibility criteria? The recipients of the money will be funds. Do these funds have to be based in Greece? Do they have to have a significant part of their portfolio in Greece? Is there a specific limit?
The funds, as legal entities, they're not obliged to be established in Greece. However, investments have to be done into Greek companies, in particular because part of Equifund is coming from European structural and investment funds that are designated for Greece. So they have to be invested in Greece, into Greek companies. But of course, there's obviously a Greek company might also have a subsidiary in UK or somewhere else. That's not, but the bulk of the investments have to be done into Greek companies in Greece.
And I think this is, it's important not to lose sight of the fact that you know, a significant proportion of this money for Equifund is indeed coming from public resources. I mean, I talked right in my introductory comments about the importance of entrepreneurship in the public sector. I think this is a good example, actually. It's you know, it's smart finance for what we hope are going to be smart investments, and this is in contrast to using public resources through grants, which essentially often tend to crowd out. This finance is explicitly designed to crowd in, to leverage. And of course, the intention is that that money will ultimately be recycled and will be used again and again and again. So, you know, entrepreneurship on the public sector side as well as in the private sector side is important.
And that's, if I may
sure.
add, that's very good for Greece that, to see that those money, also the previous one from the Jeremy was provided to EIF, the European Structural and Investment Fund, were provided by the Ministry of Development. So it shows that also public sector, let's say administration in Greece, some parts at least of it, they understand the importance of financing, in particular, startups and technology companies. And that's why, let's say, from the policy perspective, they have decided, instead of grants, to create financial instruments which are revolving and which they are targeting specific
Now, I just want to, before we turn to the audience, and I hope there will be interesting questions, but I just wanted to get a quick take from both of you on where this fits in to the wider Greek recovery story.
Well, look, as we've heard already today, the wider Greek recovery story has got to be based on a vision of what kind of country Greece wants itself to be. I mean, as economists, I'm an economist by background, and we talk, you know, when people say, well, where should investments go? You talk about the comparative advantage of a country, and clearly Greece has significant comparative advantage in areas like tourism, as we've heard, in areas like agriculture and agribusiness. I see absolutely no reason why tech companies shouldn't be an important part of the comparative advantage that Greece has to offer going forward. That requires the enabling sources of funding. So it's early to answer that question, but I sincerely hope the answer is, you know, it will prove to be a very important part of this.
Yannis?
I think that there is a great, as we speak, there's a great momentum in Greece. You saw also before, it's not only EIF and EIB, there's, I would say, part of this momentum. You saw Gordon, what he was saying about Bloomberg Associates, what they're trying to do. There are several other initiatives going on, financing initiatives, small but very important one. For example, the program of NBG seats of National Bank of Greece that they're supporting some companies, a lot of competitions for business ideas and so on and so forth. So the momentum is the right one, let's say, to give an additional boost to support financially also those attempts.
All right, great. So we're opening it up for questions now. According to Malkoudzi's rules, short questions instead of statements, and please state who you are. The floor is yours. Professor.
Hi, thank you. I'm wondering whether Greek companies, the ones that have the startups that have been successful in the last few years that probably have some degree of input into, I wonder whether they're being sold perhaps too cheaply. You know, we think of Tsakiris as a great success, but they started at about the same time as Uber, and Uber probably is worth more. So I'm wondering, do you see yourselves having a role in kind of forcing a little bit the internationalization, the globalization of these companies that you invest in through the funds that you invest in? Or are you fairly agnostic about what happens after you invest?
No, we're not agnostic at all, because we are monitoring the funds, and usually when a fund is getting the seal of VAF, it's something that it's, let's say, recognizable, at least at a pan-European basis. But what I would like to say is that it's a bit of, I don't know if you take your example, Tsakiris was sold cheaply, or some other companies. I think when it comes to M&A, the market is fully, according to me, is fully efficient. So let's say potential discounts in a company have very little to do with Greece or with the country that the company is incorporated, particularly technology companies that, let's say, market is global, and today Tsakiris might be in Greece, but tomorrow might be in Italy or somewhere else. So I would say that it's not, I don't see it as a major issue.
Is there something you want to add? Just as a follow-up, if I may, and stealing back the floor, do you think Greece in the medium term should hope to develop also growth funds, i.e. funds that don't only do pre-seed or seed capital, but also help companies become big and stay at home? Because all the successes so far have either moved their headquarters. Is it realistic?
There is not only realistic, but as I said before, Equifund has a dedicated window to growth funds, which they're supporting established big companies that are of high growth. They have business plans. Unfortunately, there is primarily lack of debt financing in Greece. Banks, they're not so eager to lend. So equity is an alternative for them. We have already invested in 2 funds in Greece, growth funds, one which is Diorama and another one which is Southbridge, mezzanine funds. So we are there, and we continue to be there, because particularly for exporting companies that they have a market to serve, proven market, but they don't have either the working capital to finance their exports, or the investment capital to expand their facilities. We are there to help them grow faster.
Yeah, but I think this is where this point about the trade-off between control and growth sometimes comes in. I mean, I have met companies in Greece that approach EIB for debt when they're not a debt proposition at the moment. What they require is an equity injection. And you have the discussion with the company, it becomes clear that the reason...
An equity discussion, which would mean losing control to a significant extent.
Whether it's significant, to some extent, okay? But you know, debt cannot substitute for equity. I mean, I hope equity shouldn't be substituting for debt either, although I understand in the Greek banking context that sometimes happens. But you know, you can't put debt in a company that is insufficiently capitalized. So that, you know, debt will not substitute for equity. And there, for companies that are at the point where they're making that decision about whether they want to grow, but are we prepared to lose some element of control? This becomes, you know, this is an important question.
Okay.
More
questions?
As we say in Greece, when it comes to giving up some shareholdings, let's say, as we say, it's better to be a minority shareholder in a supermarket than a majority shareholder in a kiosk. So it's obvious, I think.
But we like to control our kiosks in Greece. The lady in the back, and then Mr. Kamaras.
Thank you very much. My name is Kira, and I would like to ask whether a criterion for financing public sector investments, such as the ones that such as the scholarships that you mentioned twice, beyond the economic viability of the project, is also the transparency with which the funds are spent by the public sector. So I'm wondering if there are monitoring procedures to make sure that funds that are spent through the Greek state are not misused in the way that previous European investments were misused in previous decades. Thank you.
I mean, I can deal with that very quickly. Indeed,
misused in Greece? Never.
Well, it has always been the case that EIB, the European Investment Bank, monitors extremely carefully the way in which the funds that it lends are used. All the projects that we finance have to meet 4 criteria. They have to be financially viable. We're a bank. We lend. We expect to get the money back. They need to meet environmental criteria of environmental sustainability. They need to be technically sound, but they also need to be economic. They also need to pass an economic test. Now, those 4 tests are important, and they act together. So, for example, we occasionally are approached, let's say, in the renewable energy sector, with a proposition where we're told, but this should be something that EIB can finance because of the way in which the tariff mechanism works means this will be a profitable investment. The fact that it's a profitable investment is not enough to enable us to finance it. It also needs to be an economic investment. So I'm not necessarily talking about Greece here. This applies Europe-wide, worldwide. The fact that an investment can repay because of perhaps an over-generous tariff settlement on an energy project, that will not be sufficient for EIB to finance it. On the specific question that you asked about the Hellenic Institute for Research and Innovation, indeed there is a specific governance system put in place for that entity, and that was agreed between the bank and the government. No conflict here, absolutely agreed, that ensures that the decisions that are taken by the Institute on financing both PhDs and postdocs are based purely and independently on scientific criteria of scientific excellence.
Yannis, is there something you want to add?
No.
No? Adonis had a question.
Yeah, by that time you probably know the Greek innovation system better than anyone else, and probably better than many people in Greece. Have you crystallized that knowledge into a set of policy proposals on how the Greek innovation system can be improved, relating to policy action by the government, I mean? Because, through the MOUs, we know very much what are the failings of the present economy of Greece. We don't know what are the failings of the future economy that you are helping to finance presently. Thank you.
I mean, I think I think again, this is an issue where we as a bank should be modest. Look, we're owned by the 28 member states of the European Union. Any organisation needs to be very careful, about the way that it speaks to its shareholders. It's not our job to tell the government of Greece what it should be doing, what those criteria should be. Where we can contribute, we do so. But I think in terms of what it's necessary for governments anywhere in Europe or indeed worldwide to do to foster an innovation culture, I think has been handled extremely well in the earlier presentations today, and I think that what we've heard today sounds like a very good roadmap, actually for building that both the culture and an innovation ecosystem.
Yep. More questions? The gentleman in the back there.
Hi, hello. Hi, Nicholas. Quick question from your experience dealing with those who pitched for the Equifund, those fund managers, the ones who are going to support directly startups. Have you seen that the culture, because today it's all about hiking entrepreneurship into culture, do you see that there is progress in terms of the culture of the fund managers? Should we be positive in the way things are going to move forward in the next couple of years?
Absolutely yes, because it happens that I'm following Greece for the last 10 years, and in particular in this area. And I see also the evolution of fund managers in Greece and the mentality that, let's say, they're having, which I can confirm that it's transforming rapidly and in accordance, let's say, with the market needs. No, that's the case. They are fully aligned and they understand what it is about and what it is at stake and what, let's say, this sector needs.
Okay. We have another 4 minutes, probably time for 2 or maybe 3 questions, if such a thing exists.
Yes. The second wave of the Equifund is much larger scale than the first one, Jeremy program. I'd like to come back to Yannis's point on the lessons learned from the Jeremy program. Can you give us some more flavor on the impact in terms of metrics and evidence-based results, either on the tangible or intangible results that you can share with us from the Jeremy program?
Yes, well, in terms of exact figures, etc., since still this program is running, still the funds are existing and they have portfolios, etc., I cannot, any detail that I might give you is, let's say, will be, after some time, will be obsolete. But what I can tell you is that, as I said, in total, 80 million were invested into early stage and seed technology companies out of 4 funds. If I recall well, there was in total around 100 companies or a bit less financed, but I need to check. Out of these companies, some have failed very quickly. Some have are still in a gray zone, and some have excelled and have grown significantly. Some have already been exited, meaning that fund managers that finance those companies have already sold the interest to other investors, which means that companies will continue to grow. Some other companies are going for different series of financing, not in Greece, because in Greece currently there's no availability of, as we speak, of equity. But so they are addressing international venture capital funds and international investors, which is also very good news. In general, it was a quite positive experience. On the negative side, and maybe not many of you understand it, but given that we are using structural funds partially, it's not so easy for us to manage, because structural funds, European structural funds, are coming with some restrictions. As you say, as you have to be used in Greece, have some deadlines, have different reporting obligations, but that's our job as the EIF, is to blend those structural funds, our money, EIB as well, private investors, and give, let's say, a solution to the fund managers community.
All right, and one more question, if there is one. Gentleman there.
Hello, my name is Kyriakos. Going back to the previous question about looking forward, do you have some sort of database, or can the general public have access to the lessons learned from your activities so far? And meaning general public, also future entrepreneurs, can they access what you have learned all these years operating in Greece, so they can learn from the future.
Well, maybe we should take that offline. I mean, there's a wealth of information on our website around, through our annual reports, through audit reports and other reports that people can access. Whether that would be, as always, it depends what the exam question is. It depends what question entrepreneurs might want to answer. But there's a great deal of information. I mean, we're a public institution, so we follow best principles in respect of transparency. Maybe we should talk offline about exactly what it is that you're looking for, and we'll see what we can do to help with that.
Okay, that concludes our time. I want to thank our speakers very much for their contribution and you for your attention. And I think it's time for lunch. Thank you.